short trade I took on Friday, July 25th for a quick 1.5 hour win during the AM New York trading session. On this day, I had a bullish daily bias, and originally in the morning, so pre-cash open, so pre-9 a.m., that's when I start trading CL. I had a bullish narrative on the hourly. However, after we saw the previous daily high, we created a bearish change in the state of delivery, and we inversed a large bullish fair value gap, indicating to me that we actually wanted to take price lower. So I made an adjustment and was able to catch a short for a small win. I did not catch the reversal, but that's okay. When we don't catch the reversal, if we still have room to go and a clear draw on liquidity, then we can get involved with a continuation. All right, let's get right after it. First things first, you're looking at the daily chart here. We got the last 4 daily candles. I mark up these the exact same way every single time, and I'm looking for a clear indication of where price is headed. Okay, so a clear narrative. If it's not clear, then I don't have a daily bias, and that's also okay. First things first, I mark out the previous daily low and the previous daily high. I want to run a fib from the previous daily candle, and this comes into play a little bit later. Now, I want to make note that we had a sweep of some liquidity here, right? So when we had, this is very T-trades trading like, okay? This was considered a C2 candle, right? It's a C2 sweep. If we have a C2 sweep, we would expect this sort of an expansion move higher. We closed above this previous daily candle here, indicating we would maintain this direction up above. Okay, in fact, that did happen, right, as we took this previous daily high. Now, I want to make note that price books from internal range liquidity to external, and I always want to see, are we currently trading in or delivering from any sort of internal or external range liquidity? And this morning, I mean, we weren't, right? So we didn't have any fair value gaps to be trading out of on the daily. We do have this swing high up above, and we also have a swing low below. So we're sort of in between those two external range liquidities. So therefore, I relied heavily on just the candle structure, right? So again, the C2 sweep, strong close on Thursday, indicating a willingness to bring price higher. Now, one thing I want to make note of, right? So we go back to this midpoint of the previous daily candle. If price was going to continue, okay, higher, then we would want to see a wick form up in the upper quadrant here in this shaded area. Okay, so we'd want to see a wick form. We would not want to see price start trading below the midpoint, which we are already seeing, which is an indication, okay, that price most likely was going to fail to go higher after sweeping this previous daily high. That said, I was bullish for the daily bias. Okay, to me, this was a clear one-sided move up to this swing high. Anyway, I was wrong, but that's fine. Okay, you go in with the daily bias, and then you let the hourly analysis direct. At least I do. Which direction I want to get involved. Now, that said, we're going to pull up the hourly chart here. And that said, ever since Wednesday, okay, I considered Wednesday like a smart money reversal, and we've been moving higher. I actually was I was bullish this morning at around 7:30 a.m. I was bullish on the hourly time frame, and I just never got in any trade, any ability to trade anything. We got the close of the 9 a.m. candle. It was a very bearish close. Okay, I sort of wanted to see if we would make a move up into the fair value gap, out of this bullish fair value gap here. But then the next hourly candle, the 10 a.m. closed, and from that closure right there, it was pretty clear to me that the most recent change in the state of delivery was in fact a bearish one, and that we were delivering from a form of hourly liquidity as well. So I just want to make note here, right? So once I had this candle close very strong, okay, creating this fair value gap that you see right here, okay, that is a change in state of delivery because we have made a displacement move, right? And on the hourly, these are hourly candles, right? So that's very weak price action. This is the most recent change in the state of delivery. And whenever I have that, I want to draw a fib and just sort of see what lines up. Is there any draws in liquidity that line up with known fib levels, right? So we have the swing low, the daily swing low, lining up with the -2 to -2.5, and we have the previous daily low. Okay, that I'll just move over here, and we have that lined up nicely right in between the -1 to -1.5. Right now, I'm going to pull up the 1/3 ADR levels and just take note. Okay, we like to see 1/3 ADR levels indicate some sort of reversal. We also like to see them draw liquidity. So we actually had a nice sweep up here of the 1/3, and we delivered already to the 1/3 ADR. Now, if we start closing below this, we would expect price to maybe go down to the full average daily range. Okay, so immediately we are losing the midpoint of the previous daily candle. We have a change in the state of delivery. And that's confirmed by the presence of this large bearish hourly fair value gap. I am now interested in getting on sides with lower prices. Now, one of my requirements is some sort of a engagement with a bearish POI in this case, and we had that right here in the form of a bearish fair value gap. This was previously unmitigated, and we respected the midpoint of it, right? And then we started to dump. So price is actually telling us a story on the hourly. And at this point, I knew that I had already missed the reversal, but I would like to take a trade down to the previous daily low, perhaps a little further. That's what I'm thinking about as I move to the M5 time frame. So let's do that right now. All right, now, as I mentioned, whenever you see a large hourly candle close like that, it's pretty clear that that we've already missed the reversal. Let me just show you where the reversal happened. Okay, you may notice it here. Let me clean this up a little. Take this off here. Okay, up here, this is the bearish hourly fair value gap that we are delivering from, and this is a liquidity rate. Okay, so price is fractal. So just like we look at, just how we saw the liquidity rate on the daily candles, right? This is a C2 sweep, and now we're in the C3 candle, right? Want to see the C3 and then the C4 candles take us down to some sort of liquidity, and this is the previous daily low right here. Let me move this over. Okay, so as you can see, part of our requirement when looking for a reversal, right, is a sweep of liquidity and then a displacement back down into the range, creating a change in the state of delivery, which we had right here. Again, I wasn't looking at price here. I started looking at price here at around 10:55 after we had already closed and confirmed the change in the state of delivery and the bearish hourly fair value gap. However, price is also telling us a story on the M5. And that story is up close candles are quickly being closed below, and we are leaving behind fair value gaps, bearish fair value gaps that are being respected. Okay, so there's one right there, and we had an up close candle that took the liquidity, and we had a strong close below. Okay, there was no way of getting on into a trade right here. We closed so low. However, we hadn't taken the previous daily low yet, right? So I like that as a target, and I was looking to get involved in another continuation order block play. Okay, so right here, I just want to make note, we have another M5 fair value gap, and look, we respected the midpoint of that again, right? This is all telling a story. Now, I want to mark out the series of up close candles that took that liquidity. As soon as we get a close below that, if it's close enough, right, I would mark an entry with a stop above this swing high, expecting this swing high to hold. Let's move on to the next candle. We have a candle close. This is exactly where I got involved. And I got involved right here, and I'm looking for a 1.5R trade at this point. And I didn't really like that I didn't have a lot of liquidity or anything to shoot for down here, right? So I didn't expect this to go all the way to the full ADR, but I figured we would get to this previous daily low, and at that point, I would move my trade to break even and just see if I can get a 1.5R trade. So I'm going to sell a contract here. stop above this swing high, take profit at 1.5, and just let price play out. Now, as soon as we got to the previous daily low, I moved to break even, but we took the take profit right after that. So kind of just a little scalp, but again, just because you missed the reversal does not mean that that you don't have a trade still, right? So in fact, if you once we get the reversal and then we are getting supported by POIs in the direction that we're now headed, getting into a continuation is I don't know. It almost feels safer sometimes, just depending on how much room we have to go. But anyway, if you guys got anything out of this, I certainly do. Just kind of going through the trades that I take. I take trades every day and post my analysis inside of the Unicorn University Discord. There's a lot of great traders in there. Everybody's sharing their. There's a lot of different models that are being traded in there. It's not just unicorns, but if you guys got anything out of this at all, I appreciate anybody who watches these videos. If you can like, subscribe, share, or comment, and I really appreciate it. You guys have a great day.